Grateful you could stay with us. I am Pious, Kojo Backah. To our very first story, government has reached an understanding with the Ghana securities industry to sign up to the domestic debt exchange program. This is what we've picked up from persons close to the meeting. My colleague JoyNews joins me in studio to share details of the agreement. Grateful, George, you could join me on the marketplace. What are we learning about this agreement, George?
Well, what we are picking up is that the agreement that they have reached that will be soon announced will be similar to what they reached with the insurers and the Ghana Bank Association. Now, in those fine details, you can talk about the fact that the bonds this year, there will be a coupon payment of 5%, and then the 12 new papers that will be issued going into the previous year, they're going to have about 9% coupon payment on them. There will also be a stabilization fund where these industry players can fall on in case of any challenge. So those are the fine details that we are picking up, that government has reached agreement to the association, and maybe as the days goes on, or even maybe later today, an announcement will come out officially.
What does this really mean to the ongoing negotiations with the individual bondholders?
Well, again, what we are picking up is that for the owners of these collective investment schemes as well, government is going to propose an arrangement that will be similar to what they'll propose to the individual bondholders. So it appears that even though the meeting ended yesterday, government is going to come out something for the individual bondholders. So we've not gotten the fine details, but it might be slightly higher than what they are proposing, or they've proposed for the banks and the insurance association as well.
All right, and I guess we have barely 3 days to conclude with the negotiations. How far with that?
Well, from what we've picked up, it looks like the only stumbling block right now is the individual bondholders, because you can talk about the commercial banks, you can talk about the insurers, now the capital market operators. These are very significant stakeholders in this whole debt exchange program negotiation. So let's see what government is going to come out for the individual bondholders by the close of today. If they're able to reach a deal, then it means like government might be on its way to meet that 80% target that it spoke about earlier on, to make this whole debt exchange program successful. But
look, all right.
But depending on who you engage as well, it still appears that a lot of the players are still not that satisfied. But these are the headline memorandum that they've signed. So it is still work in progress to fine-tune, quote, the fine details for all these players.
All right, so I was asking, or earlier I wanted to ask you about the engagement you've had with the individual bondholders. What are they telling you, knowing that?
Well, if we should go back to what some of their convenience have put out, they're advising their members to get out of the hole, don't sign up to the program. It appears that it means that the engagement that the final round of engagement that they had yesterday, they didn't reach any agreement on that. But again, from what we are picking up from this meeting, government claims that it is going to come out with a package that they might be forced to accept it, or they will accept it. So let's see what happens. But it appears that right now, the only sticking point right now, the only headlow for government now is the individual bondholders.
All right, certainly we shall keep an eye on that and keep monitoring that development for us. George Pious, my colleague here at Joy Business. Let's continue with the rest of our stories. And the Individual Bondholders Forum has proposed some fiscal measures they say can help government save 83.5 billion cedis, insisting the finance minister must not touch their funds. According to the group, government can save 20 billion cedis from privatizing selected SOEs to Tier 2 pension funds to drive efficiency and productivity. They added that the budget provision for the energy sector shortfall of 23 billion cedis should be revised downwards by 3 billion cedis through the reduction of transmission losses, technical losses, and administrative inefficiencies. They also stated that government must maintain the 2022 capital expenditure level by reducing the non-annual budget funding amount, MDA, and foreign finance capital expenditure, among other recommendations. Meanwhile, a former president of the Association of Banks, Al-Hassan Adani, is pushing for a better domestic debt exchange deal for the sector. It is coming after government put forward a new domestic debt exchange program for the banks. But speaking on PM Express Business Edition with my colleague George Yafe, Mr. Andani noted that government can do better in terms of the package for the banks.
Once you lend money, you lose control. And especially when you lend against sovereign guarantee. It's not like I lend George Yafe money. If I lent money to you and you didn't pay, I would come straight for the house. And I know you live in a beautiful area, so I would have sold it and got my money. But you lend to government against a sovereign guarantee, which is a piece of paper. So you are stuck. So it is not an option It's just how do I ensure that this money that I've let out, which I program will come this way and it's not coming, how will it affect my obligations to the depositors, to my other businesses? That's where the issues are coming from. So it's not, the banks would wish that this was a dream and everybody would just get up and it was a bad dream, but it's a reality. So they would be looking to the borrower now, which is Ghana government, and say, look, if you just defaulted because of the size of my exposure to you and also related distance, my bank is gone. Indeed, if the banks were to really risk classify their bonds and related exposures and of course wash it through their income statement and back onto the balance sheet, very few banks will have any capital left to operate. And is that what we want? So it's not negotiation with the bank really. For me, it's about what kind of arrangement do we put in place that banks that were observing the statutory regulations and Bank of Ghana requirements, which were sound on capital, on risk management, on liquidity reserve, they were sound until this external huge contagion of government that came in. So the threat to banking is not because they managed their book wrongly. The biggest borrower is going belly up. So I would think that the question should be the answer. Is there any other way government could handle that debt without imploding the internal financial structures? That's, for me, a much more fundamental question. Is this the only way?
A while longer on the domestic debt exchange program, and government, we do know, has reached a deal yesterday with Ghana Insurance Association to fully sign up to the program. Let's get better appreciation of this, and we are joined by the Chief Executive of the Ghana Insurance Association, Dr. Kingsley Kwabason, for more. Grateful you could join us, Mr. Kwabason. Now, are you satisfied with the terms of agreement with government you reached yesterday? Are you?
Thank you very much for having me. I think that the issue is not about satisfaction or otherwise. The issue is about us as a country find ourselves in a difficult situation and by implication having an effect on the insurance sector. So the question is, what do we do together? And we've had previous engagements with the minister, and I refer particularly to the response to our 6 January 2023 letter, meeting in which he stated categorically clear. He made it clear that exemption was not an option, but he was also looking forward to positive response from the industry to enable us move forward. So, having had various discussions, we thought that what will we do together to help solve this conundrum in which we find ourselves. And so it was in the spirit of that we said that let's look at how we can move the process forward. But let me make it clear that we are an association, and if you look at how we operate, we have individual companies or members. They, notwithstanding the fact that we are saying that we can help, the individual companies do have the right to consult their boards and their shareholders for their own internal processes, just to ensure that they get the buy-in of these people as well. So that is the bit that I want to add, so that we are very clear in our mind that this is the direction based on the engagements that we've had.
So will you request for some tax rebates for your members going forward to lessen the burden on the operations as a result of the debt exchange program? Will you?
Indeed, that is one where we've asked for the Minister of Finance, the Ministry of Finance, let me put it that way, for us to have an engagement with the Ghana Revenue Authority and all of us, so that all of us agree, and so that we will strongly consider that as one of the factors that we have to look at. That's tax rebates. But most importantly, we should also do the tax treatment of the impairment that is likely to result from this particular exercise. So it's a bigger conversation. Yes, tax reduction it's on the table, but importantly, treatment of taxation in general in terms of the impairment and other factors that we have to deal with. To give you an idea, life insurance companies would have to look at something we call the regulated asset and so on and so forth. But let me also add that the discussion is also hinged on the fact that we would have further discussions with our regulator on some of the forbearances that we are likely to have, just to ensure that we stay afloat in these difficult times.
Give me a clearer picture of how the insurance industry, has fared on the back of the debt exchange program.
You agree that the debt exchange program, it's imminent, but we've not started. So we are waiting to see the full impact. Right now, we are trying as much as possible as an industry to assure our policyholders that we are still in business. Don't forget that we are risk management managers, and that's our core functions and core business. So we want to appeal to our policyholders to remain calm even in the face of these difficult times. And whenever they have an issue that they don't understand or a challenge, they should speak to the insurance companies, they should speak to the association, so that we deal with the broader issues and how we can manage those ones. Let me say that we are hopeful that after we've had the full engagement, don't forget that engagement is still ongoing. It's not a done deal yet. We will continue to engage the stakeholders just so that we don't have a hit, because it will be, in times like this, you need the insurance industry more. So if there's anything that adversely affects the insurance industry's ability to manage the risk, we will be in trouble. So we urge our policyholders to remain calm. Yes, we've had one or two surrenders, but that notwithstanding, overall, we will continue to do what we're supposed to do. But don't forget that insurance industry, we pay on annual basis. So in 2021, we paid over 1.9 billion Ghana cedis in terms of claims. On daily basis, we pay about 4.5 million. And what we are doing is to ensure that we'll be in a position to do same.
Thank you very much, Dr. Kingsley Kwabason. He is the CEO of the Ghana Insurance Association, speaking to us on the back of the latest agreement they've had with government on the back of the debt exchange program. Now, the Ghana Revenue Authority's tax assessment of multinational companies operating in the country is coming under serious scrutiny. This was after oil production and exploration company Tullow challenged over $300 million tax charge on their operations for this year. George Yafe has more.
Tullow Oil, in its January trading statement and operational update to its investors, described the assessment done by the Ghana Revenue Authority for its 2023 operations as lacking merit, and is therefore pushing for an engagement with government and the Revenue Authority to review this tax charge. The oil exploration and production giant is also raising serious questions about a similar one that was done for last year, even after that assessment had been reviewed. But for some, this development can be described as interesting, coming after a similar 8 billion Ghana cedis tax charge on MTN, which the telecoms giant is also contesting. Joy Business is aware of another multinational that is disputing the tax authority's verdict on its tax obligations for its operations for last year. But the Ghana Revenue Authority is insisting that it stands by its work done on all these firms operating in the country. But is this the question of these multinationals don't want to honor their full tax obligations to the state based on their operations in the country, or the Ghana Revenue Authority is trying to find some innovative means to meet their tax revenue target for this year? Or maybe government just need more money to manage the economy in these challenging times.
All right, so let's get on to Zoom and speak to George Ankoma. He is the lead tax partner at Deloitte Ghana. Mr. Ankoma, grateful you could join us on the marketplace. First, help us understand why the Ghana Revenue Authority undertake tax assessment of companies and levy a charge later. Why so?
Thank you, and good afternoon to your listeners. So the Ghana Revenue Authority, as you are aware, has a mandate to assess tax on businesses and individuals. And so by the law, it allows taxpayers to do your own assessment, file with them, and then at the end of the period, or at any point in time, the authority has the mandate to then conduct an audit on your operations. So it is through the audits that the authority is able to determine whether the assessment that you did file with them is in line with what they are looking at, or there is a need for additional assessment. And that is what the authority always does. In fact, the law mandates them to do tax audits. And so during tax audits is when issues of this nature comes up.
But what is the best international practice, you would say?
Well, globally, tax authorities have the mandate to conduct audits on businesses all over. And so there is nothing wrong with the Revenue Authority conducting audits on businesses. However, once audits are conducted and issues are raised or additional assessments are raised, the taxpayers also have mandate or have the opportunity to object to the assessment raised by providing the appropriate documents that probably the tax authority did not see during their audit or were not readily available at the time of the audit. And so it gives opportunity for both parties to go through what we call the objection process once the assessment is raised. And after the objection process, in fact, the objection process, we have two approaches. We have the administrative, and then we have the second step, which is the legal one. And so once you go through the administrative process and you are not successful, then you can seek legal redress through the courts. I think the good thing is that we are in a time where, fortunately, the so-called or the so much talked about Independent Tax Administration Board or Tax Appeals Board, as the name is, has been set up now. And so that gives opportunities for taxpayers who disagree with the Revenue Authority's assessment to go to the board, and I'm very much aware of some of the members of the board being very experienced tax professionals and administrators. And so they will give opportunity for both the Revenue Authority and the taxpayer to go through and provide evidence to be able to justify whether those taxes as claimed by the tax authority has really accrued or not. And I think that is done globally. So it is good that this independent board has now been set up.
I asked about the international best practice because more of the multinational companies, i.e. the MTN and of course Talon now, are questioning the approach adopted by the Ghana Revenue Authority. Are we getting the approach wrong?
Well, I wouldn't say we are getting the approach wrong or otherwise. I don't know the basis of the Tallow assessment. Per what we have all read, I have no idea what the basis of the assessment is. The GRA may have that basis. The other one, which has to do with MTN, has to do with some work that some professional services firm have done. And per what we have all read, there are two different reports now, and so the authority is using one of the assessment which was done by a third party, whereas another report is there, as we understand, was based on understanding between both parties for one other professional services firm to do, and that assessment is also there. So I think that, and like I said, as we have the Independent Tax Appeals Board, the board definitely, if this case should get to them, will then look at both approaches by these two professional services firms to be able to determine whether these taxes are due or not. And I think that is what you expect that the process should be. The fact that the tax authority have raised an assessment does not necessarily mean that they are correct all the time. Sometimes it's a matter of the information, the understanding of the information, and their conclusions based on what they had at the time. And so with the opportunity for taxpayers or in this case MTN to go through the objection process, I think that this matter should definitely be resolved.
Mr. Nkrumah, help me understand this. Before we even go to the Tax Appeals Board, as you are mentioning, what is the best approach in solving or resolving some of these issues? Because some of the firms have decided to go to court.
Yes, so before you go to court, the rules require that you should have gone through the administrative objection process, I should say, okay, before you go to court. So I expect that once any of these multinationals think of going to court, they should ensure that they have exhausted the process through the administrative approach. And then if they are still not satisfied, that is when they can go to court. And like I said, globally, this is accepted. Tax authorities allow taxpayers to defend themselves. The law bars them to defend themselves once an assessment has been raised on you and you are dissatisfied with the assessment, because the basis on which the authority is raising the assessment, you do not agree. And so once you do not agree, you are not in the position to pay that assessment. So you have to seek legal redress. But like I said, in Ghana, you have first the administrative process, seek through the commissioner, and fortunately, we have the appeals board now. So go to them, and if you are not satisfied, then you move to the next level. And so that is the best approach, I would say. Any business or any multinational organization that is having a tax assessment and is dissatisfied, ensure that you engage the authority at the various levels to ensure that you go through the process before you can think of going through the legal process.
All right. Thank you very much, George Ankoma, for your time here on the Marketplace. He's a tax expert with Deloitte. You're watching Marketplace with me, Pious, Kojo, Backah. We are taking a quick break. We'll be right back with more. Please stay. Welcome back. This is the Marketplace with me, Pious, Kojo, Backah. Vice President of the Ghana Union of Traders Association, Clement Boateng, has reiterated the frustration of the trading community over the rejection of transactional values presented by importers by officials of the ports. According to him, the situation is breeding mistrust among stakeholders at the port and adding on the high cost of doing business there. In an interview with Joy Business, he appealed to the Custom Commissioner of the Ghana Revenue Authority to intervene, solving the challenges.
Our major problem that I would say we have had with them, has been on the issue of accepting a transaction values, because according to WTO convention, that is what custom is supposed to use in terms of valuation and then classification of goods. But many a times our values, are not accepted, and then they have their, own means of classification and valuation. So going into 2023, these are some of the areas that we expect them, to consider by accepting our transactional values. If you accept transactional values, I would say compliance level will then be high, and then they will be able to, achieve much of their revenue, and even get more, as they rightly said, that even last year, they were even able, to achieve their target and even they had excess. So I would say if they also adopt the transactional values that we always present, I'm sure that you will even get much of their revenue.
But have you engaged them on this transactional?
Yes, we have engaged them. We have engaged them, but to be frank, I would say we don't know the reasons why oftentimes they don't want to accept transactional values, and that.
Thanks very much for your time here on the Marketplace with me, Pious, Kojo, Backah. Always a pleasure serving you. For more news, you can log on to myjoyonline.com/business. Great stories on that portal for you. Do enjoy the rest of our programs and have a lovely weekend.